Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, so Fed yesterday, we talked about how the upper band was in sight ahead of it. The upside reaction range dealt with the upper band. Then they rejected it back down and through, which was a nice little move by the bears. And we're just kind of now, we're crunched back up into this zone. You've got the 9-day, 20-day, 100-day, 50-day, all getting involved in one way, shape, or form on the daily chart. And you're really, you've accomplished nothing either side. We're right back to where we were trading, right here on, 17th, 16th. We're certainly not exploring any new territory to the upside or challenging lows to the downside. Hourly chart, June chart, you can see the 9-day underneath that acted as support and has acted as support in Globex. Here's your hourly mid-band, which they tested in and around the Europe Open, which held up around, not quite 4,002. You've got round number 4,000 that is trying to hold things in as resistance. It'll be important to see if they can spend the entire day today below 4,000. If they do, then that's licensed to come on in to 3,900 tomorrow, or maybe even later today, and at least challenge this weekly pivot down at 39.32 where we were trading on Monday. As far as the bullish case is concerned, and I forgot to mention, you've got the daily mid-band right here, the 20-day, basically bisecting all these hourly candles that are pretty narrow. Considering that our Globex range right now is about 30 handles, but once they wrote it up here, since 1 a.m. and into Europe Open, what's your high here? 0.25, your low 77. Yeah, 20 and change. Post FOMC, that's pretty tight. So still battling out over both the hourly mid-band and the 20-day, which are, locked up together. So your pre-FOMC price from yesterday was 33.75. When that finally cracked, you had a really nice move in. So we've got a runner from our last trade yesterday, which is from up at 40.33. We've rolled the stop down on that to 4,003. So, if I'm surprised they didn't get me overnight. If they get me, they get me. And we'll go in today fresh. But if you're the bears, you want to stay below 4,000. You want to be printing stuff with 3s on it, not 4s on it. Bulls, you want the opposite. You want to continue to establish that 4,000 is an area, sub 4,000 is an area where the bears are not comfortable. Now, if you do that, that's fine. But, monthly pivot holds that in yesterday. We're still just in a zone. We're in a zone. I could draw all kinds of rectangles on this chart or whatever. It's not going to do us any good. Just understand that the ultimate delineator of whether we're buy dips or sell rallies is that daily mid-band. That's the green line. And right now we are absolutely battling over whether the next leg of this tape wants to be buy dips and sell rallies. And, 18 hours after the Fed, that makes a lot of sense, right? I mean, that unknown is now known. And the tape and price have got to decide what to do with it. It's not up to us to decide what needs to be done with it. Price doesn't give a damn what any of us think, or certainly what any of us feel or want the market to do. The market's going to do what the market does. Doesn't care what your slant is on Twitter and whether your freaking thesis is going to get proven right, because that's not going to pay anybody a freaking nickel. Trade price, respect risk. Take your profits where you find them. This thing's very two-sided when it is battling over daily mid constantly. Constantly. So you have to be flexible. If it starts to not go your way, you better get flexible. Move in the other direction. You start getting dug in and adding to losers, you can put yourself into a real swing trade shit show in this type of a tape. Don't be that person. All right. That's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'm traveling tomorrow, so there won't be a webcast. I will be back with everybody come Monday. Have a great weekend. Take care.